Hi everyone, I am Suhas Mohan, your tax mentor, and in this video, we will be discussing the second question of the Tax UK June 2025, past paper exam. So the first question has already been uploaded on the YouTube, and in this video, we will be discussing the second question. So let's quickly start off by reading the question. So this question is related to Chika. Chika come in self-employment on 1st September 2024, preparing her first set of accounts for the 8-month period ending on 30th April 2025. Chika has elected to use the accrual basis for her self-employment income. Okay, so here we have to identify that accrual basis is being used for the self-employment income. Okay, so always remember that once you keep highlighting the points, it'll really help you in understanding, what are the important aspects and that so that you do not forget anything that is important. So let's move on to the next part of it. It says self-employment. Chika's statement of profit and loss for the 8-month period ended 30th April 2025 is income is this much, expenses, car expenses, delivery van expenses, and other expenses is so and the net profit is 51,260. All right. Now, Chika's car expenses during the 8-month period ended 30th April 2025 for insurance, fuel, and servicing total 2,600. Okay. The car expenses is a total of 2,600. All right. She drove a total of 7,500 miles, of which 1,500 were for private journeys. So, here, since we're talking about self employment, the private journeys will be a disallowed cost. So, this is something we'll have to highlight. Moving on to the next part of it, during June 2024, Chika incurred advertising expenditure to promote her new business of 1,180 pounds. This expenditure has not been deducted in calculating the net profit of 51,260. As you can see, the business has started on 1st September 2024, but this expenditure was incurred in June 24. And this is an advertising expenditure which was intended to promote her new business. So that means it is a pre-trading expenditure that is completely allowable as it is solely and exclusively for the purpose of business. So this will also be an allowable cost. So we'll highlight this as well. Okay. Next, moving on to the next. Chika purchased the following vehicles on 1st September 2024. That is a delivery van whose cost is 13,900 pounds and the CO2 emission rate is 148 grams per kilometer. So for delivery vans, usually when we're calculating, capital allowances, the CO2 emission rate is not at all relevant. So for us, only the cost is relevant. And next, coming to the car is 11,500 pounds, but the CO2 emission rate is relevant for cars. So because we'll have to identify which pool it falls into for calculating our, the capital allowances. So since it is 44 grams per kilometer, which is less than 50 grams, it will come as a part of the be a part of the main pool. So for that reason, we will have to highlight this as well. Next, Chika's forecast tax adjusted profit for the year ended 30th April 2026 is 84,000. Okay, since you are asking only about 2025, this is not relevant for this question at least. All right, moving on to the next part of it, it says rental property. Chika lets out a rental property which she has owned for a number of years. During the tax year 2024-25, the rent due was 8,640 pounds. However, the tenant did not pay the March 2025 rent of 720 pounds until May 2025. So guys, we are talking about rental property, which means it becomes a part of the property income. So, which clearly states this is completely a different part than comparison to the self-employment. So, when we're talking about rental property, here they have only mentioned that self-employment is accrual basis. So, we should never assume it also means it is for rental property. So, rental property should be done for individuals. The obvious method should be cash basis and not accrual basis. So since here the rent due was 8,640 pounds, the tenant did not pay 720 pounds. So we shall highlight this because this is not a cash that we have received, so this should be deducted from the rent due. The expenditure on this property for the tax year 24-25 was as follows. Agent fees and insurance was 1,000 pounds. Okay, highlight this. Replacement washing machine was 500 pounds. The new washing machine is the same model as the one it is being replaced with. So always remember, in rental property, if any furniture is being provided, the replacement cost should be taken only to the extent of the value of the of the previous asset, and no, it should not be an enhancement cost. Only the replacement cost should be taken. So since the replacement of the washing machine is 500 pounds, that is also expenditure that can be taken. Moving on to the next part, replacement dishwasher costed 490 pounds. The dishwasher was an upgraded version. So you can see, unlike the washing machine, the dishwasher was an upgraded version of the one it replaced. Had the replacement been done of the same model of the old dishwasher, it would have cost 390 pounds. As I've already told you earlier, replacement should always happen with the same asset. If not, it will be considered as a enhancement cost, and that should not be taken in rental property income. So for that reason, the cost that we take into consideration is only 390 pounds and not 490. So you should never get confused in such points, because that way you'll be losing out on a few marks. Next, UK government securities or gilts. On 1st December 2024, Chika purchased 12,000 nominal value of it's gilts, paying interest at the rate of 2% per annum. Interest is paid half yearly basis on 31st October and 30th April. Chika sold the gilts I'm very sorry guys, it is gilts on 31st March 2025 for 12,080 pounds, including the accrued interest. Okay, so probably if they ask about chargeable gains, this might be applicable. All right. Next is joint income. During the tax year 2024-25, Chika and her husband received a total savings income of 460 pounds from a deposit account which is in their joint names. Guys, remember, it is in their joint names, and there has not been given any ratio with which they have registered with the HMRC. So always any joint income should be split in 50-50. So 460 pounds should be highlighted. And next is, Chika and her husband also jointly rent out one furnished room of their main residence. During the tax year 24-25, the couple received rent of 8,600 pounds. So this complete thing will be a part of the rent property income. All right. So this is, rent a room you will be applicable because they are renting out one room, one furnished room of their main residence. So rent a room relief might be available to this without incurring any allowable expenditure. So the rent they have received was 8,600, but they have not incurred any allowable expenditure. Chika and her husband always use the most favorable basis as regards for the tax treatment of the furnished room, which means, the rent received is 8,600, but no cost has been incurred. So it is either you can take it as 8,600 minus cost. So your rental income will be 8,600 pounds, or you can reduce it by the rent a room relief that is available to you, which will be provided to you in the tax tables. You can see a rent a room relief limit is 7,500 pounds. That means from 8,600, since they use the most favorable basis, from this 8,600, the rent a room relief of 7,500 can be deducted to get your total property income. So that is what this means. All right. So far, these are the pointers that we'll have to remember. Now let's move on to the first part of the question. It says, calculate Chika's tax adjusted trading profit for her self employment business for the 8-month period ended 30th April 2025. Your computation should commence with the net profit figure of 51,260, indicating by use of zero any items that do not require adjustment. Okay. So, guys, they have clearly mentioned indicate by use of zero. So, from here, we have to start it from here, and since we're starting it from here, any disallowed expenditure should be added back and any allowable expenditure should be deducted. So that is what we should be doing to get our values. So now let's calculate tax adjusted trading profit for the year ended 30th April 2025. So first we'll start off with our profit. Profit is 51,260. Next, since depreciation is a non-cash expense, so it should always be added back. So add back depreciation. Depreciation is how much? 1700 should be added back. Next we have car expenses. So in car expenses, we have seen that the total cost is 2600. Okay, 2600, but of which 1500 of the total driven miles was 7500, but of which 1500 were for private journeys. So the private journeys is a disallowed cost, so that should be added back. Car expenses, car expenses, private journey. So that is nothing but is equal to 2600 into 1500 by 7500. That will give us a cost of 520, which should be added back. All right. Next, we can see that we have a third note over here, which talks about during June 2024, Chika incurred advertising expenditure to promote her new business. As I've already told you, this is a pre-trading expenditure that was incurred exclusively and wholly for the purpose of business. So that means it is a deductible expenditure. But since it has not been deducted in calculating the net profit, we should be deducting that less advertising expenditure. Okay, less advertising expenditure. How much is it? It is 1180. Okay, so we have covered everything so far. Next, we'll move on to the next part of it. That is delivery vans. At delivery vans and delivery van expenses is all allowable. So you need not have to make any adjustments for it. And other expenses are also again all allowable. So you not make any adjustments for it. But next, there are purchases that are involved. So we will have capital allowances. So we will also include capital allowances. But guys, always I would suggest you to show capital allowances as a separate working because that will help you in, having a proper clarity on how do you calculate that. So let's probably keep it over here because you will not extend beyond this. Working one, capital allowances. Okay, so here we'll see one is we have main pool and since because delivery van and car, both of these also and the car is since it is less than 44 grams per kilometer, we'll only have one main pool, that is main pool, and special rate pool is not applicable over here. So let's make up over here main pool, and over here we will add allowances. All right. So first, what do we have? First, we have delivery van. Okay. Delivery van. How much was it purchased for? 13,900. But delivery van, you get annual investment allowance on that. Annual investment allowance is applicable. The total AIA is available is 1 million. But since it is an 8-month period, it should be adjusted. Total AIA will be adjusted. Total AIA is 1 million into 8 by 12. Taken the zeros correctly? Yes. So it will be 66,667. 666,667. So our delivery van is within this range. So the entire delivery van will be eliminated from. So we have less AIA, 100% on delivery van. So minus 13,900. And allowances, you should add the same amount here. This is how you should be presenting in your final examination as well. Whatever you deduct as an allowance, that should be shown in the final allowances column to get your total allowances. All right, delivery van has been taken off. Now we have car. Car less than 50 grams per kilometer. So it will be a part of main pool. Since for cars, AIA or FIA, FIA is available on cars with zero emissions, but since the car has 44 grams per kilometer emissions, it will be a part of main pool. So 11,500. But if you see, the car has been used only for 6,000 miles of business use. So that means car value should be apportioned is equal to car adjusted per business use. Always make this a point is equal to 11,500 into 6,000 by 7,500. So your car value is 9,200 now. Now because of this car is there, you have, and you know your WDA will be available. Since it is main pool, you can always check out what is the rate. You need not have to remember it. It is 18%. But you do not have to remember all of those. You'll be able to find it here in the capital allowances part of it. You can see the main pool is 18% and special rate pool is 6%. So less WDA less WDA at 8% for 8 months. Since we are calculating, since our period is only 8 months, we should be taking WDA at 8%, at 18% for 8 months. All right. So here it will be is equal to this into 18% into 8 by 12. Always add a minus here. So the same allowance, whatever you have calculated, should be taken over here as well. You will get your value. Now you can delete this because this is just for your referencing. Okay, now less balance brought forward or total allowances. First add your total allowances is equal to sum of these both. All right. Balance carried forward will be is equal to this plus this. All right. This will be your balance carried forward and these are your total allowances. So you will be taking your capital allowances here minus, always show the referencing. So it's always easier this way. Show it this way is equal to minus. There you go. That is how you calculate it. So with this, we come to an end of calculation of everything because you can cross check again if you've taken everything or not. They've asked for the 8-month period. This is not relevant for us. So now our tax adjusted trading profit would be tax adjusted trading profit is equal to sum of all of these 37,296. That is your tax adjusted trading profit and you get your 5 marks. So in this guys, let me tell you something. Your capital allowances will be giving you 3 marks. All right. Depreciation will be giving you 0.5. Car expenses will be giving you zero point 0.5 and adding your advertising expenditure back will be giving you your 1 mark. So total gives you your 5 marks. All right. So that's why I always tell capital allowances, show it as a working so that it is very clear and understandable. All right. So with this, we finish the first part of the question. Now let's move on to the second part of it. Here it says calculate the amount of trading profits from self-employment that will be assessed on Chika for the tax years 2024 and 25-26. Okay, so here we should be calculating trading profits that will be assessed for the tax years. So what the trading profits that will be assessed for the tax years, how do you calculate it? the for trading that will be assessable for tax year would be the profits that run from 6th April 2024 to 5th April 2025, and for 25-26 it will be 6th April 25 to 5th April 26. But here, what is happening for 24-25? The business has only started from 1st September 24 and it ends on 30th April 25. So for that, our tax year 24-25, the profits will only be related from 1st September 2024 to 31st March of 2025. All right. That means the 5 day period that is there, it can be considered negligible. So you can eliminate 1 month out of your total profits. It was for 8 months. So it will be your taxable profits for tax year 24-25 would only be 7 by 8 of what you have calculated here. All right. So that is what we'll be showing here. Show it as B. B. All right. Okay, do you think I have moved to some other question? Okay, probably it was switched to some other question. My bad. Yeah. So here, let's keep it as B. Now, trading taxable trading profits assessable for 2024 to 25 would be profits from 1st September 2024 to 5th April 2025. Okay, so how do you calculate that? Is equal to, what have we taken in the previous value? That's just for over here. The answer is 37,296. So is equal to, you do need not have to show the entire calculation again. You can directly write the value into 7 by 8, because you know it's for 8 month period. But it since for in our tax year only this 7 months is falling into our tax year of 24-25, you'll be taking it as 7 by 8. So this will give you your figure of 32,634 for tax year 24-25, and with this you'll be scoring 1 mark out of the 3 marks that is allocated to it. Next, taxable trading profits assessable for 25 to 26 would be profits from 1st April, sorry, from 6th April 2024, 2025 to 30th April 2025. So these profits, because they'll be a part of this, so those will be applicable here. So that will be is equal to, always look at the amount, 37,296 is equal to 37,296 into 1 divided by 8, 4662. This is relating to this. And next, they have also given us the profits for the tax 30 year ended 30th April 2026. So here, since it is only 8 months, the next is completely for the 12-month period. But again, the last 1 month will not be applicable to us because our year ends on 5th April 2026. So for that reason, out of this 12 months, we will be taking only 11 months of it, because 1 month will be coming from 6th April 25 to 5th, 30th April from the previous year's profits, from the previous profits that we've calculated, and the 11 months will be coming from this 84,000 profits from 1st May 2025 to profits from 1st May 2025 to 5th April 2026. How do you calculate it? Is equal to 84,000 into 11 by 12. That will give you your total profits. Now, your taxable profits would be is equal to the sum of the both of them. So if you calculate this, this will give you your one, this will give you 1 mark, this will give you 1 mark, and with these and the total sum of it will give you a total 3 marks. With this, we complete the second part of the question. All right. Next, what they are asking us is to calculate the taxable income for the tax year 24-25. So here, guys, again, remember they're asking us to calculate the taxable income for 24-25. That means it includes everything that is from self-employment income, the rental income, and also savings income that you receive from your, the total savings income and the guilds that you have invested in, and also the rent a room relief, and also the rent a room income from rent a room, renting out a room. All right. So that is how you'll be calculating it. Now, what they ask for is taxable trading income. Make that as your heading. Chika's taxable income for the tax year 2024 to 2025. So now first, what do you add? Always make show it in this manner: non-savings income and savings income. Because you do not have dividend income, as you've seen from the question, these are the two aspects that you'll be adding. So first will be your income from self-employment, or you can show it as trading income also. Trading income will be a part of your non-savings income. So that will be equal to what you have calculated here. That is 32,634. So if you do not want to write it down, always show it in the referencing format. So guys, always remember when you're calculating your taxable income for the tax year, it should be calculated by apportioning it until from 6th April to 5th April 2024 to 6th April 24 to 5th April 2025. All right. But when you're calculating capital allowances and all of those, it should be for the accounting period. That is the period for which the accounts have been prepared for. All right. Next is we have rental property. So we have property income. So now let's show property income as a working, because there are many things that should be added and it would always be beneficial if you show them as a working. So now let's show it as a working. You can also add it on the side over here. Make it as note working one, property income. So as I've already told you earlier, property income, the basis that you should take is default basis is cash basis unless and until specified otherwise. So here it says first we'll take rental property. First, rentals received. Rental received, you will be showing it as is equal to the total receivable is 8,640, but you have not received 720. So you show it as 8640 minus 720. That will be your rent received less expenses. Less expenses, you will be showing it as expenses now. Here we'll be showing agent fees and insurance. Agent fees and insurance. Agent fees and insurance is an allowable cost because it is incurred wholly and specifically for the purpose of the rental property. So it will be 1,000. All right. Next is agent fees. Next is replacement of washing machine. Replacement of washing machine. Since the washing machine that is being replaced is with the same model, the replacement cost is same. So we'll be taking the same value. But next, where we have replacement of dishwasher. Since the dishwasher there is an upgrade, but we should be taking the original cost, the cost of replacing it with the old model. So that is 390. That is the amount that we will be taking and not 490. Always remember this point. Okay, replacement dishwasher is minus 390. That will give us total in rental income is equal to sum all of these total property income. Total rental property income is this. Next, we have something known as rent a room relief. Rent or room rent. It has been mentioned that all the current received rent of 8,600 without incurring any allowable expenditure, but uses the most favorable basis. So because of which you should write room rent net of renter room relief. Renter room relief. So it should be 8,600 minus 7,500. Always know, write this point down for better understanding, is equal to 8,600 minus 7,500. This is your room rent that you have received, a taxable room rent. All right. Now, your taxable property income is a sum of this. Taxable property income is equal to this plus this. 7,130 is your property income. And property income will also be a part of your non-savings income. So you add it here, is equal to, always, as I told you, reference it so that your answers, you might be making less of clerical errors. All right, we have completed trading income and property income. Now let's come to UK government security guilds. Okay, so now, no, why it's glitching. Now, interest on guilds. It says the guilds were purchased for 12,000 on 1st December 2024. So from 1st December 2024 all the way until 31st March 2025. That is to your tax year. So December to Jan, Jan to Feb, Feb to March, and March to April because it's on 1st December. So we take 4 months into consideration. So it will be interest on guilds will be a part of your savings income. So you should mention it as is equal to 12,000 into 2% is your interest that you'll be receiving into 4 by 12. So 80 pounds. 80 pounds is your interest that is receivable. Here they have told about sold the gifts, but that is not relevant to us. So we'll only be taking the interest that we have received. All right. Interest on gilts, we have taken it. Next is, okay, I think there is a small correction that I should make. Over here, Chika and her husband jointly rent out the furnished room. So because of that, as I mentioned earlier as well, so this has been jointly rented out. So for Chika, this will be you will be getting only half of it because it has been jointly owned by both of them. They receive both, both of them receive equal amount of rent on it. So it should be divided by 2. Now your taxable income property income would be 6580. Very sorry for that. So once you make such changes, what will happen? Because of this one change that you have made here, your answer has been changed directly over here as well. All right, clear? Interest on guilds, you have taken it. Next is joint income. Next, joint income, Chika and her husband received total joint savings income of 460 pounds. So savings income, joint deposit. So since here also it will be is equal to 460 divided by 2, because joint deposit both of them are entitled to receive the amount, so both of them will be allocated the amount according to their sharing, equal sharing, that is 50-50. Same thing for this as well as for this. And with this we have completed all the types of income. Now we'll be writing the total here. All right, total is equal to sum. All right, and this can be dragged to here as well to get your total. Now your total income would be from this, always remember, less personal allowance. So personal allowance, the priority should always be given to your non-savings income before you move to your savings income. So, your personal allowance would be minus 12,570. If you're confused about that, do not worry. Always open the tax table and you will be finding your personal allowance here. Personal allowance is 12,570. You will be able to find it here. If you're in doubt, always check that out and you'll be good to go. So now taxable income would be, since your total personal allowance is being used up on non-savings income, this savings income will not be getting any personal allowance. So your taxable income would be is equal to sum total taxable income is equal to sum of both of these. 26,954 is your total taxable income at the end of the day. So with this, we come to an end of this question. Always okay. So for this, what will you be getting? You'll be getting trading income. You'll be getting zero point 0.5 marks. Property income will give you 2 marks. Okay. Interest on gilts and this one will calculations will give you 1 mark each. Okay. So total 4.5. And next personal allowance is 0.5, 5, and your total value 2 marks. Okay. With this, you get your total 7 marks. All right. 2, 4, 6, 7. Yes. And with this, we come to an end of this question. See you guys in the next video, guys. Until then, if you guys have any doubts, feel free to ping in the comments and I will be able to I'll be responding back to you guys as soon as I can. Bye. Practice well.